Monday, April 13th, 2026. Like and subscribe. The $1 Investor. IBIT Full Breakdown. Today I want to talk about the iShares Bitcoin Trust ETF, ticker symbol IBIT from BlackRock. This is a spot Bitcoin ETF. That means its job is simple. It is designed to track the price of Bitcoin, not the profits of a business, not the cash flow of a company, and not a basket of operating firms. BlackRock says directly that the trust seeks to reflect generally the performance of the price of Bitcoin, and the fund launched on January 5, 2024, with an expense ratio of 0.25%. That first point matters because IBIT is not a normal ETF in the way people think about broad market funds. When you buy something like an S&P 500 fund, you are buying a collection of businesses that make money, sell products, and in many cases pay dividends. When you buy IBIT, you are buying a wrapper around Bitcoin exposure. BlackRock's pitch is convenience. You get Bitcoin exposure through a regular brokerage account without having to manage private keys or direct crypto custody yourself. That makes it simpler. It does not make it safer. BlackRock also states that the trust is not an investment company registered under the Investment Company Act of 1940, so it does not operate under the same framework as a standard mutual fund or stock ETF. Now let's deal with the last 5 years part the honest way. IBIT itself does not have 5 years of operating history because it only launched in early 2024. So if we want to understand what IBIT has done over a 5-year window, we really have to study Bitcoin itself, because Bitcoin is the engine under the hood. Over the last 5 years, Bitcoin has done what Bitcoin always does. It has moved in huge cycles. It went from the depths of the post-pandemic years, then into a full speculative boom, then through a brutal crypto winter, and then back into a major institutional acceptance phase after US spot Bitcoin ETFs were approved and launched in January of 2024. Reuters described that ETF launch as a watershed moment for the crypto industry, with US-listed spot Bitcoin ETFs trading $4.6 billion on day one. Reuters also reported that the new spot Bitcoin funds drew about $1.9 billion in inflows in their first 3 days, and BlackRock's IBIT became the first spot Bitcoin ETF to hit $1 billion in assets within days of launch. What Wall Street saw in IBIT from the beginning was not mystery, but access. That is the whole story. Traditional investors wanted a familiar, regulated brokerage vehicle that could hold Bitcoin exposure without forcing them into the direct crypto world. That is why BlackRock moved into this space, and that is why the fund exploded so quickly. By April 10, 2026, BlackRock's product page listed net assets of about $57.7 billion, making IBIT one of the biggest and most liquid products in the space. Reuters later described it as the largest spot Bitcoin ETF and a central part of the crypto ETF boom. That also tells you what BlackRock is doing with it. BlackRock is not treating IBIT like a niche side product. It is using it as a major bridge between traditional advisory accounts and Bitcoin exposure. On BlackRock's advisor-facing materials, the firm explicitly markets IBIT as a convenient, cost-effective, and secure way to access Bitcoin through an exchange-traded product. It also points out that hundreds of billions of crypto assets still sit outside traditional advisory platforms, and that digital asset demand can help advisors keep or win client assets. In plain English, BlackRock sees IBIT as both an investment product and a distribution tool. Now let's talk about what the fund has done so far. The current market price from the finance feed is about $40.57. BlackRock's fund page showed a closing price of $41.56 on April 10, 2026, with net assets just under $57.7 billion and a 30-day average trading volume of more than 48 million shares. That tells you this thing is not only large but liquid. You're not dealing with some tiny backwater product. This is a major institutional vehicle. From my screenshot, my own position is 5.852127 shares, worth about $237.22, with an average cost of $46. My total return shown there is negative $31.96, or negative 11.87%. My recurring buy is $1 per day. That matters because my strategy is not market timing. My strategy is steady accumulation. That is a completely different mindset from somebody trying to guess the next weekly move. Now let's get to what Wall Street and analysts think. The cleanest answer is this. Professionals do not look at IBIT the way they look at a broad equity ETF. They look at it as a high volatility access product. The bullish camp believes Bitcoin is becoming a permanent asset class, with deeper integration into global financial systems, continued ETF inflows, and growing institutional acceptance. Reuters reported that Bitcoin hit a record high above $125,000 in October of 2025 and linked that rally to institutional investors, friendlier U.S. policy, and Bitcoin's increasing connection with global financial systems. Reuters also reported record global crypto ETF inflows in October of 2025, with Bitcoin attracting $3.55 billion in a single week of ETF flows. That is the kind of evidence bulls point to. The bearish camp sees the exact opposite side of that same coin. They see an asset with no cash flow, no dividend, no balance sheet, and no valuation anchor in the traditional sense. They see something that can soar when sentiment is hot and get crushed when risk appetite disappears. Reuters reported that investors pulled a record $523 million from IBIT in one day in November of 2025, as Bitcoin fell sharply from earlier highs. MarketWatch also reported that US-based spot Bitcoin ETFs had seen heavy outflows during part of 2026, reflecting how quickly sentiment can reverse. That is what the bears point to. This thing can go from hero to headache very fast. So where do individual analysts land? The serious ones usually land in the middle. They do not deny the demand. They do not deny the success of the ETF structure. They do not deny that BlackRock has made IBIT the flagship product in the category. But they also do not pretend this is a low-risk retirement fund. Morningstar's coverage frames it through risk and suitability rather than through some simple buy call, which is exactly how it should be viewed. This is a tool for exposure, not a magic solution. Now let's talk next 5 years. Nobody knows exactly what Bitcoin or IBIT will do, and anyone pretending otherwise is selling certainty they do not have. But there are 3 clean roads I can lay out. The first road is the bull case. In that world, Bitcoin keeps gaining acceptance with institutions, more wealth flows through spot ETFs, more advisors use products like IBIT, and Bitcoin continues moving deeper into the mainstream financial system. If that happens, IBIT probably does very well because it is one of the biggest, most liquid, and most trusted wrappers in the category. BlackRock's scale matters here. Distribution matters here. Branding matters here. The second road is the middle road. Bitcoin remains relevant, but it keeps doing what it has always done: brutal rallies, ugly drawdowns, and constant volatility. In that world, IBIT can still work for long-term accumulators, but only if they can stomach the ride. That means this is not for the person who panics every time the market turns red. The third road is the bear case. Regulation gets tougher, risk appetite dries up, global markets tighten, or Bitcoin simply fails to live up to the digital gold or institutional adoption narrative. In that case, IBIT can drop hard because there is nothing underneath it except Bitcoin price exposure minus fees. No dividend, no operating earnings, no internal business engine to soften the blow. My bottom line on IBIT is simple. It is the cleanest big brand vehicle for Bitcoin exposure inside a traditional brokerage account. BlackRock has built it into the heavyweight of the category. Wall Street respects it because of the access, the liquidity, and the scale, but none of that changes what it is. It is still a high-risk, high-volatility product tied directly to Bitcoin. It can do extremely well if Bitcoin wins bigger institutional adoption over time. It can also punish people badly if they buy it without understanding what they own. For my own journey, my $1 a day buy makes sense only because it fits my discipline-based system. I'm not trying to outsmart the market. I'm building exposure slowly, on purpose, with a controlled amount of money. That is very different from telling the average beginner to go chase Bitcoin. And for this part, I would keep the same warning you used on the Ethereum one. This is not your conservative core. This is one of your higher risk, swing for the fences positions. Like and subscribe, the $1 Investor. Today I want to talk about the iShares Bitcoin Trust ETF, ticker symbol IBIT, from BlackRock. This is one of my high-risk positions. This is not one of my conservative core funds. This is one of my swing for the fences investments, and I want to be clear about that from the start. IBIT launched on January 5th, 2024, so the ETF itself does not have a full 5-year operating history yet. That means, if we want to understand what this fund has done over the last 5 years, we really have to understand Bitcoin, because Bitcoin is the asset underneath it. BlackRock says this fund is designed to track the performance of the price of Bitcoin. That is the job. Not business earnings, not dividends, not cash flow, just Bitcoin price. That is important because this is not a normal stock market fund. This is not like buying a basket of companies that make products, pay dividends, and grow profits. This is a wrapper, a very powerful wrapper, but still a wrapper around Bitcoin. What BlackRock has done with IBIT is simple. They took Bitcoin exposure and made it easy for regular investors to buy it inside a normal brokerage account. No wallet, no private keys, no direct custody, no crypto exchange headaches. That is why Wall Street likes this product, not because it removed the risk, but because it removed a lot of the friction. And it worked. Spot Bitcoin ETFs launched in January of 2024, and right away they drew huge attention. Reuters reported that US-listed spot Bitcoin ETFs traded about $4.6 billion on the first day. They also reported that the group took in about $1.9 billion in the first 3 days. And BlackRock's IBIT was the first spot Bitcoin ETF to hit $1 billion in assets just days after launch. That told the market something very fast. Demand was real. Now let's talk about the last 5 years. Since IBIT is new, this is really a Bitcoin story. And Bitcoin's last 5 years have been exactly what you would expect from Bitcoin. Huge runs up, violent crashes down, then recovery, then institutional money showing up. Bitcoin eventually pushed above $125,000 in October of 2025, according to Reuters, before pulling back again. That tells you everything you need to know. This thing moves big. Now let's talk about what Wall Street thinks. Wall Street respects IBIT because it is big, liquid, and backed by BlackRock. As of April 10th, 2026, BlackRock listed the fund at about $57.7 billion in net assets. That is not small money, that is serious money. That is one of the biggest signs that this product has become institutional grade. What the bulls see is simple. They see Bitcoin becoming a permanent part of the financial system. They see more advisors using products like this. They see more institutional inflows. They see Bitcoin becoming more accepted over time. If that happens, IBIT could continue to grow because it is one of the strongest vehicles in the space. What the bears see is also simple. They see something with no cash flow, no dividend, no earnings, no real valuation anchor, just price. And when sentiment turns bad, that price can fall hard. Reuters reported that investors pulled a record $523 million out of IBIT in one day in November of 2025. So this is not some smooth and steady fund, this is a volatility machine. Now let me bring it back to my position. From my screenshot, I own 5.852127 shares. My market value is about $237.22. My average cost is $46. My total return is negative $31.96, or negative 11.87%. And I am still buying $1 a day, every day, no matter what. Why? Because I am not trying to guess the next move. I am not trying to time Bitcoin. I am building exposure little by little, and that is a big difference. Now let's talk about the next 5 years. There are really 3 roads. Road number 1 is the bull case. Bitcoin keeps gaining acceptance. Institutions keep buying. Advisors keep using products like IBIT, and BlackRock keeps growing this fund as the main bridge between regular brokerage accounts and Bitcoin exposure. If that happens, IBIT could do very well. Road number 2 is the middle road. Bitcoin stays relevant, but it keeps doing what it always does. Big rallies, big crashes, big emotions. In that world, IBIT still works for patient people, but only if they can handle volatility. Road number 3 is the bear case. Regulation tightens. Risk appetite disappears, the market loses faith, and Bitcoin drops hard. If that happens, IBIT drops hard too. That is the truth. No sugarcoating. So my conclusion is simple. IBIT is probably the cleanest, strongest, most established Bitcoin ETF wrapper in the market. BlackRock has made sure of that. Wall Street respects it. Institutions use it. The liquidity is there, the scale is there, the brand is there, but that does not change the reality. This is still Bitcoin exposure. High risk, high volatility, high upside, high downside. And that is why I do not treat this like one of my conservative core funds. This is one of my higher risk positions. A calculated risk. A controlled risk. Not a blind gamble. And for anybody watching this, I want to be clear. I do not recommend beginners chase products like this just because they hear the word Bitcoin. This only makes sense if you understand the volatility and if it fits your own system. For me, $1 a day works because that is how I live. $1 at a time, every single day, no excuses, no emotions, just discipline. Like and subscribe. The $1 Investor.